All right, welcome to The Explainer. Today, we are diving into a name you've definitely heard, but whose sheer scale and influence can be, well, kind of hard to wrap your head around. BlackRock. We're going to be using our source material as a guide to unpack the argument for how this one firm allegedly sits right at the center of a huge, complex web of finance, technology, and political power. So, let's get into it. First things first, let's just try to comprehend the scale we're talking about. As of early 2025, our sources project that BlackRock will have over $11 trillion in assets under management. To put that into perspective, that is more than the entire yearly economic output of every country on the planet except for the US and China. It's a number so massive, it almost feels unreal. And that mind-boggling number really brings us to the core question of this whole explainer. It's the question our sources spent a lot of time trying to answer. How on earth did a single company go from being just another asset manager to what they describe as the essential, can't-live-without-it operating system for the entire global economy? Let's dig into the argument. According to our sources, this whole story doesn't just start with money. It starts with technology. And at the very heart of BlackRock's power is this proprietary system, a system that's become almost a legend in financial circles. It's called Aladdin. So what exactly is Aladdin? Well, on the surface, it's a tech platform that grew out of BlackRock's obsession with managing risk. They call it the firm's central nervous system, a tool built to see and handle financial risks across gigantic, complicated portfolios. But, as you might guess, our sources claim its real job goes way, way beyond that. And this is where the narrative really shifts. The source material reframes Aladdin completely. It's not just a shield to defend against risk. Now, they argue it's a proactive system for surveillance and control, a system that gives BlackRock an unparalleled, godlike view of the entire market. The sources have a name for the effect of this system. They call it Aladdin's curse, and they say it works in 3 steps. Step 1, everyone starts using it. We're talking competitors, other big banks, even government regulators. Step 2, this gives BlackRock what they call an insurmountable information advantage. They can see which way the entire market is flowing in real time. And step 3, this creates a total technological dependency where these massive financial players feel like they literally can't function without it. This dependency, they argue, creates what they call the single greatest conflict of interest in the modern financial world. Think about it. The argument is that because Aladdin is so essential to the system, governments have to hire BlackRock to manage financial crises, even while BlackRock itself is in a position to profit from those very same crises. It's like the doctor making you sick and then selling you the cure. So, okay, BlackRock had the tech. That's one piece of the puzzle. But technology by itself doesn't get you to $11 trillion. The next piece, according to our sources, was a brilliant, decades-long strategy of aggressive and just perfectly timed acquisitions. If you look at this timeline from the source material, you see a really clear pattern emerge. They start with about $165 billion at their IPO in '99. Then in 2006, they buy MLIM, which gives them a huge global sales force. But the real game changer, reportedly, was in 2009 when they snapped up Barclays BGI. And more recently, they've made this huge pivot into the shadowy world of private markets. That 2009 deal for Barclays Global Investors, which happened to include the iShares ETF business, well, the source material calls that a masterstroke of predatory opportunism. And why? The timing. It happened right in the smoldering ruins of the 2008 financial crisis. BlackRock saw the entire world shifting to cheap, passive investing, and instead of just joining the trend, they bought the single biggest player in the game and used their scale to become the undisputed king of ETFs. And that brings us right up to today with their big move into private markets. Now, these markets are super opaque. There's not a lot of public info. So by buying the companies that provide the data on these markets, our sources claim, BlackRock isn't just playing the game anymore. They're effectively buying the rulebook, the scorecards, and the referee's whistle. Okay, so we've covered the technology and the market dominance. Now our explainer shifts to where these two powerful streams meet, creating what the source material calls the BlackRock nexus, this critical intersection of finance, technology, and government. A really key idea to understand here is the revolving door. You've probably heard the term. It's this constant flow of top-level executives moving between jobs at BlackRock and powerful positions in government, like the Treasury or the Fed. The sources are clear. They don't see this as a simple bribe. It's something more subtle, a structural blending of corporate and state power, where the lines get so blurry you can't tell where one ends and the other begins. And another alleged tool of influence they point to is BlackRock's big push on ESG. That's environmental, social, and governance investing. The sources describe it as a two-stage poison. Here's how it supposedly works. Stage 1. BlackRock uses its immense power as a top shareholder in basically every major company to force them to adopt ESG policies. Stage 2. BlackRock then conveniently rolls out a whole suite of new green funds and products to profit from the very transition they just forced into existence. When you put it all together, the analysis from our sources presents BlackRock's entire ESG strategy as a weapon disguised as a virtue. It's framed as this incredibly powerful tool that's used to gain control over corporate boardrooms and to create brand new multi-trillion-dollar markets, all under the very noble-sounding banner of saving the planet. So the big question is, where is this all going? The final part of our source material moves from analyzing the present to making some pretty bold predictions, laying out a stark vision of what they see as the endgame to this massive concentration of power. The sources predict this coming great securitization. The idea here is that the next big thing for Wall Street isn't stocks or bonds. It's the actual physical things we need to live. They paint a future where water rights are bundled up and sold in ETFs, family farms get swallowed up into huge corporate holdings run by AI, and the dream of home ownership is replaced by a reality of being a permanent renter from some massive global fund. Now, the next piece of this predicted future is something called a central bank digital currency, or a CBDC. Basically, it's a new, purely digital version of the dollar, issued directly by the government, and the sources predict that it will be rolled out as the perfect solution to whatever the next great debt crisis is. But here's the warning that comes attached to that prediction. A CBDC, the sources claim, isn't just about making payments easier. Because it's programmable money, it could become a system of social control woven into the very fabric of every transaction. In theory, every single purchase you make could be monitored, approved, or even blocked based on whatever metrics the people in charge decide are important. And that's where the source material leaves us. It's painted this picture of a deliberate, decades-long strategy that it believes is leading toward a future of incredibly centralized control over technology, over finance, and over society itself. It doesn't pretend to have all the answers, but it does leave us with one final, very provocative question to think about. If this is one possible future, what's the alternative?